All right, guys, how many of you have planned for your future? One of the videos that one of my colleagues posted was, have you planned for your death? That is a sick question to ask, but in this video, I'm going to be talking about a topic that most people just cringe, just doesn't want to talk about. Hey guys, welcome back to the channel. This is Soutine coming to you from the Valley. If you've been watching the NBA playoffs, you know where the Valley is. It's in Phoenix, Arizona. In this video, I'm going to be talking about a mundane topic not too many people want to talk about. That happens to be life insurance. Do you have life insurance? You see the joy in my face? I have life insurance. All right, through my company for one, and I also bought a life insurance policy when I was younger in my 20s. I'm going to be talking about how life insurance can help you as you age. I'm going to be talking about how life insurance can help you transfer money to your wife and kids and grandkids. Life insurance can also be a mechanism for tax shelter. Please, I advise you to talk to your CPA and legal team about that. Because if you're watching this video 5 years from now, you never know if the government has changed the laws on us, all right? But life insurance is not something that people want to talk about. Why? Because there's a connotation to, hey, why should I be buying life insurance when I'm young? I'm going to live forever. I don't know when God's going to take me to heaven. I don't know when something's going to happen, but I'd rather hedge my bet and buy life insurance knowing full well that should something does happen, my wife, my kids are taken care of. In this video, I'm going to be talking about term life and whole life. The two main ones. I'm going to be talking about premiums. I'm going to be talking about why you want to be buying life insurance as soon as you can and as young as you can. Okay? I'm going to be talking about what life insurance can do for you as we all age. Actually, what it's going to do for you when you do age. All right, guys, let's talk about the two forms of life insurance. There's term life. You get the name term. It could be a 1-year term. Typically, if you work for a company, guess what? Every year you're renewing your benefits. And if you check on that life insurance, guess what? It's most likely a term life insurance policy. Now, you can buy a term life insurance policy outside of your employer. Term life insurance policies are typically 1 year, 3 years, 5 years, 10 years, 15 years, 20 years. The maximum that I've seen personally is 20 years. If you survive and you live past the term, hallelujah, congratulations, you've lived longer than your life insurance policies. Why is term life insurance policy very popular? It's very popular because one, it's affordable. I won't use the term cheap because cheap can mean a lot of things. It's affordable compared to a whole life insurance policy. After the 20 years has expired, or your life insurance has expired, you live, you move on. The insurance company has already made money off the premiums that you've paid in every month, or every year, or every quarter, or every 2-3 years, whatever it is, okay? Well, 20 years from now, when you're going in for your physical, or the life insurance company sends you to go get a physical, or someone to come to your house to get a blood test or an EKG, are you going to be younger? No. Are you going to be healthier? I would hope so. Chances are neither, because as we get older, something does happen. Well, as you get older, something does happen. The life insurance company is going to take all that test results, medical results, and they're going to put it through a fine-tooth comb. They're going to look at their chart and says, 47, blah, blah, blah. The underwriters are going to look at the chart that the actuaries come out and say, ooh, you know what? That $1 million policy is going to be 4 times more expensive than what you could have purchased when you were in your 20s. All right. That's why, term is cheaper because the premiums are more affordable. See, I just used the word cheap. But if you survive and live longer, and if you want to buy another policy, it's going to be more expensive. All right, let's talk about whole life policies. Whole life policies means your whole life. Someone can actually buy an insurance policy when you're born. And then that whole policy can live for your entire life. I'm throwing out numbers here, and they can be checked by other people. But, for a typical male in the US, I believe they say that we'll live to be about 80 years old. So that's whole life. That could be 80 years old. For a female, you could be living until you're 90, 100, or there are some life insurance policies, quote unquote, that will expire when you're 120. So if you're a female and your grandparents bought you a life insurance to the tune of $1 million. I'm just using $1 million here, and funded it, especially funded it with an index. Okay, that money can grow tax-free, all right, for quite a long time, to the point where by the time you do die and you never took out any money and you decided to give it to your great-grandkids, your insurance policy could be worth $2, $3, $4, $5 million, whatever the return is on your life insurance policy with an index component to it. I'm a big proponent of getting insurance, and if you can afford it, definitely a big proponent of getting a whole life policy. Insurance policies, especially from a whole life insurance perspective, has many advantages to term, and those advantages include additional riders, premium increase riders, inflation riders, long-term care, critical care, all these other riders out there, okay? I'm so big on it because as I get older, I look at what I have and I realize I know I'm going to be leaving my family something, all right? My wife's not going to be destitute because I passed away, all right? I hope to be passing away like in my 100s, okay? But should that happen, my family will be okay. You know, they'll miss my humor, they'll miss my facial comedy, but they'll be okay. Let's talk about premium. Premium is what you pay to the insurance company. It's usually monthly, it could be quarterly, every 3 months per year, it could be annually, or it could be upfront. It all depends on your insurance company, the one that is issuing the policy to you. The higher the policy amount, $100,000, $500,000, $1 million, or depending on what companies will sell you, maybe $1.2 or $2 million policies, or other different packages, your premiums will be higher. Typically, the cheapest premium is going to be for term, because as I mentioned earlier on, terms 1 year, 5, 10, 15, 20. All right, it's going to be cheap because it's not whole life, and the insurance company is taking a bet on you that you're going to live past that term, and they're going to make money off of the premiums that you paid in. Those premiums, what I've seen is they remain the same throughout the entire policy. So as your income goes up, those premiums are going to look, cheaper and cheaper every year, every decade. However, if you're pushing 50 and you're buying an insurance policy today, and like I mentioned earlier on, chances are when you're pushing 50, you've got a knee injury, you've got some sort of medical history. Okay, the insurance company, the underwriters, the actuaries who work for the company are going to rate you differently, and as a result, most likely your insurance premium is going to be much higher than the premium that you would have paid for when you're 18. Okay, so my recommendation is if you can afford it, please buy a policy when you're young because the premium is going to be cheap. And another reason to buy life insurance is generational wealth transfer. I use the term generational. Why? Because there are so many parents, grandparents out there buying life insurance on their kids or great grandkids so that they can fund their life insurance policies. So as they fund their life insurance policy, let's just say a life insurance policy with an index component where there are index funds in there, they're transferring money legally. Again, please consult your tax accountant and lawyers to better understand how this works, especially in today's time, because this video, you might be looking at this 5 years from now and the government has changed the laws. So please consult those people first. However, as those parents and grandparents are funding the insurance policy, the grandkids or the kids are getting money that is legally transferred to them based on the limits for that year. So let's just say the limit hypothetically for this year is $15,000. If there's a grandparent out there and they bought a life insurance policy for their grandkid to the tune of, I'm just going to throw $1 million out there, and they fund that life insurance for the kid at $1 million, okay, plus pumped in the maximum amount legally possible by the IRS and etc. They're putting money into that life insurance policy to when it turns 18. The kid's going to be looking at the life insurance policy and going, oh, wow, thank you, Grandpa. Now, having said that, how that kid is able to withdraw that money is going to be a different question. And again, caveat, please talk to your tax accountant, CPA, legal experts on that. But based on the story I just mentioned to you, for those people who know how to transfer wealth, it could be through a trust, a will, etc. This is one method, one vehicle that is used out there. We're at the end of the video. Thank you so much for watching this entire video. As you can see in my face and my excitement, I love life insurance. I have life insurance. My kids understand life insurance. I want to give you the exuberance, the positive energy about life insurance, because the next time you see the commercial on TV or the commercial on Sirius Radio, or you get that phone call, someone's trying to sell you life insurance, yes, the insurance company is going to make money off you. You do not want to be in that position where you pass away and leave nothing for your family. If we all live to be 80, 90, 100, and live a great life and a happy life, that life insurance policy is, you're not even going to worry about it in your deathbed, okay? Let's put it that way. Life insurance is a form of wealth transfer, to be able to transfer and also leave that legacy to your family, to your wife, to your kids, grandkids, in a form that, you know, is a lump sum. And again, talk to your CPA and accountant. The expectation is today, the money that goes to your family via death is tax-free. You never know. The government might change it in the future, all right? Another reason to get it is if when you're young and healthy, if you bought a life insurance with long-term care, as we all get older, it's going to cost more money to take care of us. Medical bills, you know, assisted living bills, etc. If you have one of these riders and it was afforded to you as an option to purchase, you know, and you bought it, you know, when you're turning 67, 70, and God forbid something happened that you've got to be requiring assisted living, you can take money out of those types of life insurance packages. Again, life insurance with the rider, to where you can take the money out and pay for those expenses, okay? If you like this video, please click the like button, click subscribe. If you have any questions that you would like me to answer around life insurance, I'll do my best to answer those questions. I used to be a former life insurance agent. I love life insurance just because I've seen what it can do for other people. If you're on the fence because, you know, it costs this much, costs that much, I'm going to tell you right now, when you're young, it's cheap. Henceforth, why I am a big proponent of buying life insurance when you're young and as fast as you can for the largest amount that you can for what you can afford.